Good morning, everybody. Happy first day of August. We are getting through summertime, guys. How's everybody doing today? You hear me okay? Luciana, good morning. Nice to see you. It's funny. Discord is abbreviating everybody's names. I'm glad I know you guys. Hey, good morning, Safia. Nice to see you. Guys, it is a beautiful Tuesday morning. What do you say we talk about reading indicators? What do you think? Before I do anything, I know a lot of you got super excited about momentum trades, and a lot of you are kind of breaking the rules an awful lot, having some problems, and you're probably saying to yourself, man, I'm just not good at these momentum trades. I made a checklist for you, and I pulled it straight from Discord, guys. Um, so that's my gift for this morning. It's the momentum checklist, and all it is the rules. But when I look at the pictures that people are posting about momentum trades, everybody took a bunch of half truths from John Novak's lectures, and they're trying to turn it into a trade. A lot of people are saying, "Wow, I watched this video of John Novak," or "Wow, John Novak taught this classroom. I'm going to do what John Novak does." But the problem is none of you guys are writing rules for this. None of you guys are creating checklists. None of you guys are going back and you're studying it, right? So I added that checklist. And the one thing I'm going to encourage you guys to do if you're interested in momentum trades, I love momentum trades. I think that they can be an awesome, awesome first shot at a top or a bottom, but you have to understand the rules, guys. So go through. If you have questions, we'll talk about it in the second hour. But remember, every time you add a trade to your plan, you've got to go through that study process. You've got to go take pictures. You've got to verify that it wins more than it loses. You've got to make sure that it's repeatable. You have to be able to identify the looks so that it becomes easy. And then and only then, when you're comfortable and successful with it on simulator, should you add it into your live plan. Guys, there is zero reason to lose real money or prop firm money on a trade that you haven't tested or perfected. So with that said, let's get into the day, guys. Let's do some education. I'm excited about today. I'm excited about the week. Life is pretty darn good. Let's embrace it. And let's start with the same way we start every morning, guys. Let's go check our news at forexfactory.com. Make sure that we're not trading into that freight train of emotion. News can move the market. It can make it turn. It can make it too fast to analyze. So we're not concerned. Did it, Zeba? I love that. He does that. John Novak inspires confidence. If you've never met John Novak live, you know the part in Braveheart where Mel Gibson's going back and forth on the horse, and everybody can't wait to go fight. That's John Novak. He's freaking amazing. He's a leader, and he does instill confidence, right? So that's a good thing. Do you, Gary? I hope it's all good news. Guys, today at 10 a.m. we have ISM Manufacturing PMI. We also have JOLTS job openings, and then we have ISM Manufacturing prices. We have two high impacts and a medium impact. Good morning, Jose. And it's all happening at 10 a.m. These can move the market. These can change the way the market's behaving. This can make the market move too fast for you to analyze. So being aware of when those news releases are happening, guys, and then making a decision whether or not you want to trade into that potential sporadic area is up to you. And then when we talk about what we're doing today, guys, everything's going to come from the education page. And my first hour, especially if you're brand new in here, guys, my first hour is the same every hour. I try not to change it up because what we're doing is we're laying a foundation here. We are creating this base that you guys can grow from. So I want you to think of learning to day trade as eating an elephant, right? We're going to focus on one bite at a time. Anyone else? Hold on, guys. All right. Are we better? All right, guys, check, 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 check. All right, check. Input volume. All right, guys, test, 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 test. Is everything working? Test, 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 test. All right, guys, does that help a little bit? Can you hear? All right, guys, I turned my microphone volume all the way up. Can you hear me? Are you with me now? Okay. I went through on my settings and it said that it was only using 70% of my volume, so I'm not sure what's going on, but this headset may be wearing out. Good morning, PFI. All right, guys, let's see if we can make this happen again. I apologize for that. I'm not sure exactly what's going on, but I'll get to the root of it today. Let's see what we can do. So, guys, today we're going to do what we do every day, right? We're going to start basic. We're going to focus on the foundation. And I want to remind you guys, and this is especially for you new guys, and when I say new people, anybody that's not consistently winning more than they lose, let's call it that. If you are not consistently winning more than you lose, I want you to consider the fact that maybe you're giving yourself too much to think about, that maybe you're focusing on all of it instead of the best of it. So what we're going to do today is we're going to focus on the best of it first. We're going to create this foundation. We're going to give you a solid platform to grow from. And then from that foundation, you're going to find your groove. You're going to find what works for you. You're going to recognize the trades that make you comfortable. You're going to recognize the looks that make you feel good going into a trade. But what I'm going to do is I'm going to start with a very simple trade. I'm going to start with a high probability trend trade. And the idea behind the high probability trend trade is to create that foundation, to give you this base to grow from. Hey, Abdulaziz, good to see you. And this high probability trend trade is a trend trade when every indicator on every chart agrees for the trade. Guys, this is your confidence building trade. This is the one that typically wins 70 to 80% of the time. But the most important thing is that it's going to teach you to read your charts. And chart reading, can't stress this enough, chart reading is the basis for everything you do. Guys, you have to be able to look at your screen, right? To see these indicators and to understand the information that the market's giving you. And that's really what this trade is going to do for you. Because what you'll find is that 90% of what you do during the day is reading your indicators and waiting for advantages. The other 10% will be taking those advantages and working them into a trade. So we're gonna focus a lot on simply being able to read our charts, and then when we read our charts, we're gonna take the advantages and we're gonna turn those into a trade. So we're gonna use this high probability trend trade initially. In this high probability trend trade, everything on every chart is going to agree. Your triggers are going to be the strongest. There's going to be nothing in your way. This is a trade that typically wins 70 to 80% of the time. And the idea is confidence through the memory of success. And that's exactly what we're going to run through here. As you grow with Nexgen, one thing is held true forever, guys, and the step-by-step path to becoming a confident trader, ASAP, is posting your trades in class, is getting into class and taking the time, hey, good morning, Lady P, taking the time to show me what you're doing, right? Asking for feedback, because that learning curve is going to go so much faster if you're getting feedback on everything that you're doing. Good morning, Debbie. And what you're going to find is that you and I will have a conversation every day. Every time that you post a picture, you and I are having a private session. I'm looking at what you've done. We're going to talk about what you see, what you did, and we're going to talk about how you can do it better. If there was a mistake made, we're going to identify it. The most important thing is we're going to start to recognize patterns in you. A lot of people like to jump in. A lot of people like to fight momentum. Maybe they're trading into termination conditions. If you give me 10 pictures, I'm going to recognize your patterns, and you and I are going to work together to get over that hump. So posting your trades in class is huge. And then guys, use a trade journal. Use that spreadsheet that Nexgen gave you. I'm going to give you a copy of mine right now, just in case you can't find it on your computer, right? We're going to get rid of all excuses. Guys, everything that you do, every time you pull the trigger, you're going to take a picture. And I just put that picture in the room for how to annotate your charts. Every time you take a picture, guys, write your rules on your chart, because you're not doing it just to be busy. What you're doing is you're reaffirming what your rules look like. You're validating the momentum, right? The clear path. You're recognizing the entries, and you're writing the rules that are giving you these conditions on, and that repetition is going to create recognition. And then every time you take that trade, every time you take a trade, you're going to put it into your spreadsheet. This is your trade journal, guys. This is what you're going to go back and study each morning. If I took 5 trades yesterday, and I've already done this today, and I did, I took about 5 trades yesterday. I've gone back and I've looked at each and every one of them. What did I do well? What did I do wrong? Did I get in early? Did I get out late? What worked? And that's really the most important thing, is what works. What are the patterns that are bringing me success? And then the other side of that is what didn't work. Guys, we talked in this room a lot in the last couple weeks about those small triggers on the NASDAQ, right? That is the what didn't work. That came from analysis each morning, recognizing where I was losing trades, and then going back and doing the study to learn how to alleviate that problem. That's what we do in the classroom. What feels easy? What feels forced? Guys, in that brief historical study each morning, don't sidestep this one. This is going to prepare you for the day, but it's also going to accelerate the learning process. The second half of the spreadsheet, guys, is every time your rules are met, you're creating a picture journal of what it looks like to have your rules met. And this green section on my spreadsheet is nothing but entries. These are entries from class. These fit the rules to get you into the market. And I can tell you right now, as a brand new user, if you take this afternoon and click on these links, you're going to recognize that all of the entries are coming from areas inside of favorable large triggers. You're going to recognize that there's opportunities on the large chart that get you focused on the entries on the small chart. And it's consistent, and it's recognition through repetition. And then every great entry is going to have a management opportunity, and you're going to be able to go through, when you get good at these entries, to go back and re-annotate your charts. How can I make more money with my ability to read charts from these great entries? And then you're going to begin to recognize patterns in the market, and that's what this chart reading is. And I'm going to point out the patterns that I recognize as well. And then a whole section on when you shouldn't be trading anymore, reinforcing those rules that trading into these Fibonacci areas is rarely a good idea. So guys, take advantage of that spreadsheet. I just put mine in the room for you. Please steal it. Use it, right? The hammer's only good if you swing it. And then our first hour this morning, guys, is going to be learning the rules, the Fibonacci rules and the trigger line rules for when it's okay to trade. When is it okay to take that high probability trend trade? We're going to do that this morning. We're going to focus on it for the first hour. You guys are going to simulate your trades, right? You're going to get in there. Don't wait until you feel like, hey, good morning, Bobby T. Don't wait until you feel like you've got this down to simulate trades, right? Get in there. Use that simulator. Spend that Monopoly money. Make every mistake you can. I raced motorcycles with a guy that said, how will you ever know where your limits are if you don't go screaming past them, right? Make those mistakes, post them in the room. Let's work through it together to get them fixed. We're going to simplify a lot today, guys. We're going to focus on one trade for the first hour, the high probability trend trade, the trade where everything on your chart agrees. Then we're going to discuss what we call a medium probability trend trade, and that's going to be where there's an issue on the chart, but you have to focus on this first trade first because it's going to teach you to recognize those issues. It's going to teach you to manage those trades. So we're going to simplify to 2 trades in our plan. What are the looks that you're going to commit to? And then guys, you have to learn the looks so that they become easy. That's where this spreadsheet comes in. 240 pictures of rules-based entries. It creates the opportunity for that look to become easy. You're going to be able to use market replay. You're going to be able to go back and fix your mistakes from the day, retrade the day, double your repetitions, right? I can give you the greatest software in the world. You have to get the experience. You can double that experience through using market replay. Fix the mistakes, take the trades you missed, skip the trades that you shouldn't have, and then take pictures, guys. Take pictures, 15 pictures a day at least. That's 75 a week. That's 300 in a 30-day period. By the end of 90 days with Nexgen, you're going to have almost 1,000 pictures. And if you post those pictures in Classroom, you're going to have 1,000 instances where you received feedback on what you see. It's difficult to not move forward with that sort of repetition. Repeat this process every day till you're always taking the correct trades, until you're taking those trades that are rules-based, that are pragmatic, that have been proven and tested to win more than they lose. And then that's when you're going to guarantee yourself that you can trade live money, right? Because you've got that plan. So you're going to go to one of those prop firms and you're going to test your plan on a prop firm. And what you're going to find is that you're human. And maybe you're not as good as you thought you were. Or maybe you break rules and got lucky a few times, but once the stakes got real, that luck ran out, right? So you're going to go back and you're going to present those pictures again, and we're going to keep on this path to moving you forward a step every day until you reach your goal of being a confident trader. So I'm going to do my part by teaching the rules. You're going to do your part by posting the pictures, and together we're going to get exactly where you want to be. And then I like to throw out this invitation as well. There's a lot of people in this room that have moved on to prop firms, and there's a lot of people in these rooms that have moved on to live money, but maybe you're still struggling. This is still your class. If you take a trade, especially if you don't win the trade, and you're not sure why, post it in the room. I don't care if you've been with me for a day or a million days, right? Get it in the room. Let's get that feedback because there's lessons for everybody. And then we're going to keep it simple. I'm going to say simplicity 1,000 times today. Hopefully it sinks in. Your high probability trend trade is 3 rules. That's it, 3 rules. Hey, Levon, nice to see you in here. These 3 rules provide 3 advantages. Guys, when I trade, I think in terms of advantages. I love the rules, but I've written them on my chart so many times that now I look at a rule and I only think of the advantage. Rule number 1 says strong trigger lines. When that rule is met, I have the advantage of momentum. Rule number 2 says termination conditions false. When that rule is met, I have the advantage of a clear path. And my rules for entry say that I'm going to use a limit order at areas inside of favorable large triggers. And when I do that, I have the advantage of an entry area. And it's 3 advantages put together that create a trade, that create a high probability trend trade, that create a trade that typically wins more than it loses, that brings you success as a brand new trader, that allows you to put yourself in a position to be successful and profitable while you take that foundation and grow beyond it and begin to look for those other trades. But we're going to focus on one, we're going to master it, and then we'll move on to the next. These 3 rules happen on 2 charts. Now yesterday we saw a lot of examples of people showing me 4 charts, 3 charts, and they're adding this information, right? I have to look at this chart because so-and-so looks at this chart and he's a better trader than I am, so I need this information. But the reality is if you're not prepared and you don't understand that chart, it creates noise, right? It's like background noise when you start getting older and you can't hear the darn TV. Focus on 2 charts initially. Your large chart is going to lead the way every time. Your large chart is going to give you everything that you need to determine whether or not it's time to take a trade. Your large chart is going to define direction, momentum. It's going to define your areas. And it's a broad stroke of a brush. It's showing the overall opinion of the market, what the people in charge believe the market should be doing. Your first two rules are going to happen on that large chart. You're going to have the advantage of momentum and a clear path to get to your targets before you ever turn your eyes off of that large chart. Levon, perfect test. Absolutely wonderful. Day one, already posting pictures. Levon, get in the habit of posting those things every day, and we're going to get you where you want to be. When that large chart tells you that it's time to look for an entry, when you have these first two rules met, guys, we're going to go to a smaller chart, a faster chart. You're going to refine that broad stroke of a brush. And this is going to be your entry chart. This is a chart that gets you into the market. Large chart's going to give you direction, momentum, and areas. Small chart's going to give you the entry. And you're going to be able to use this small chart as a refinement tool. What happens in one bar on the large chart that gives you all this information and all these advantages, you're going to turn it into 15 to 30 bars on this smaller, faster chart. You're going to pinpoint with amazing accuracy where the market is likely to continue, and it's going to allow you to reduce risk, and it's going to allow you to increase your profit potential. So guys, 3 rules, 2 charts. Let's focus on simplicity this morning. Everything that I talk about comes from the tutorial section from the education page, and we're going to start with the T3 trigger lines, and they define the trend, guys. Your large chart defines the trend, and when we're defining the trend, it's the easiest thing you're ever going to learn with Nexgen. Let me open the picture here. If the background on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, we're in a downtrend and you're only looking for rules to be met for high probability trend trade short. Guys, never fighting the trend is really the first advantage that you're going to give yourself, because the trend is established by people with deep pockets. The trend is established by people that can move the market, that can change the direction of the market, that can keep the market moving in the direction that it is going. So we're never going to fight the trend, guys. We're going to make sure that we always give ourselves this advantage as a new user to keep us on the safe side. Once we've identified the trend, we're going to make sure that we have strong trigger lines. Rule number 1 says that I need strong trigger lines because they're going to provide me the advantage of momentum. In an uptrend, strong trigger lines mean that the small triggers are crossed up. They're above the large triggers. The dashed lines are your large, the solid are your small. They work together, crossed up, angled in the direction of the trend, and it's the space created between the small and the large that lets me know that the odds are favorable for the market to continue in the direction of the trend. Guys, odds favorable momentum is a phrase that you're going to hear in class all the time. It's that best of the best trigger look, that strongest trigger look. And when you have this look, this is the most favorable for buying a pullback to Fibonacci support on that smaller, faster chart. And you're going to see it as one bar on the large chart. You're going to see these tails, or these wicks as a lot of people call them. This is a pullback on a smaller chart. This is your entry for a high probability trend trade to take you up to the next key areas. In a downtrend, the small triggers should be below the large should be wide and angled in the direction of the trend. And once again, it's that space created like scissors open, ready to cut, that lets me know that the odds are favorable for the market to continue in the direction of the trend. Most favorable look for selling a pullback at Fibonacci resistance to continue the move in the trend. So guys, this is probably going to be the easiest look that you learn outside of the trend, and we're just going to stick to strong triggers. Small's above the large are wide, they're angled in the direction of the trend. There's those tails, those potential entries to take us up to the point where those large triggers weaken, typically at Fibonacci. When your small triggers work their way inside of the large triggers, this is what we call a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. I'm a big fan of language, guys. If this is strong, and this is weak, and this is odds favorable to continue, and this is anything can happen, the only thing that you have to do is make a decision. Do you want strong and odds favorable, or do you want to trade weak and anything can happen? Guys, your advantages come here from that strong look. And this is going to be your best of the best look, and this is going to be the precursor to everything that you do. is making sure that you have odds favorable momentum. So I'm going to ask the classroom, because I love to ask the classroom, is everybody okay with that idea? The separation between the large and the small creates odds favorable momentum. When the small work inside of the large, I get anything can happen. And guys, look at how anything can happen precedes a reversal in the market. We trade advantages, and your first advantage should always be momentum, setting the tone. And guys, when those trigger lines don't line up, when the small are up and the large are down, when the background's green but the triggers are red, these are the powers that be battling for supremacy. These are buyers and sellers duking it out on the schoolyard. A lot of traders get caught in the middle of this fight, guys, and they get beat up. They're like, I think it's going up, but no, maybe it's going down, but doggone it, it's going up again, right? These moments of indecision are where Nexgen users have this amazing advantage to not get caught in consolidation because you have favorable momentum. And if you just sit on your hands and you're patient just a little bit while they fight it out, they're eventually going to get back. Someone's going to take the lead, and we're going to get those advantages back. That's you, Lady P. We can fix it, but you have to commit to rules. And that, I think, is the biggest thing for new users is first you have to learn the rules, right? What do they say? And then we're going to do what we do right now. What do they look like? And then we're going to keep it simple, guys. We're going to focus on one rule at a time, one idea, one advantage at a time. And these odds favorable momentum triggers, guys, they're going to happen. And let me put trigger lines on this. I want you guys to see just how easy it can be to identify odds favorable momentum. I'm going to put only trigger lines on. I'm going to get rid of all the noise for you. And guys, this is my most current bar on the Nasdaq outside of the large. Whoops, sorry, now you can't see it. The smaller above and outside of the large. Does everybody see that? Here it's at its best, right? They break away, they create space, and now they're working back, and we're right at the tail end of momentum. Look at this, indecision. All right, guys, can you hear me? Yep, okay. I switched to my AirPods. This is good. No echo, nothing like that. Ooh, that was really loud in my ear. Everything's good on this though. So I'm just gonna go with the AirPods now. We're gonna lose that headset. So far, cool. Fingers crossed. You know what? If these cut out, then we know it's Discord. Otherwise, it may be the headset. So let's get back to it, guys. Strong triggers, the market pushes down, right? Strong triggers, the market pushes up. Flat and weak triggers. Debbie? I'm connected. I'm just double checking and making sure it's not clear. All right. I'm going to go to my sound settings real quick and see if I can adjust the settings on these. Hold on just 1 second, guys. Headphones, output. Let me know, did that help? I combine my left and right channels. No. Choose device. Microphone Pro X. All right, how's that? Is that better? I just changed to my headset. I'm trying to go through all of them right now to see what I can do. Not really. All right, hold on. We're getting there. I apologize, guys. And I'm not exactly sure what's going on. So, all right, input, microphone, headsets. All right, test, 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 test. It says that my microphone is going well. All right, so it's good for you guys, no issue. Maybe, Debbie. I'm trying to. Are we better? Okay, cool. Guys, I apologize about that. It may be my headset going through. I don't particularly like wearing the ear pods when I do this, but that's okay. We're gonna make it work, right? That's what we do. So guys, give me a Y in the room. Are you with me? Strong triggers push. Look at the indecision right here. And see how it goes sideways. And this is without the benefit of Fibonacci. We can tell just through the trigger lines, rule number one's not met. No reason to get chewed up there, right? So I'm going to put my areas back on. And then what we're going to do is we're going to go through, and guys, we have the advantage of momentum. Strong trigger lines leads the way, right? Everything starts with that odds favorable momentum. And now we're going to make sure that there's nothing in the way, that termination conditions are false. In a termination condition, again from the second rule right here, a termination condition is an area that may reverse the market. Um, these Fibonacci areas are the areas that the institutional traders are reacting to. They are reflections of the psychology of the markets, the ups, the downs. And what you're going to find is that when you reach one of these areas as a termination condition, it's going to take away your advantage of a clear path. So we need to be able to identify what are the areas that we're looking for and looking at. And if you're brand new to the room, guys, this is a great map of what it is that you're looking at. Areas that may stop the market are divergence highs. It's this magenta line that prints from a pivot when there's a loss of momentum. Divergence lows, the cyan line. Red Fibonacci resistance, yellow 1-to-1s, or blue support, guys. And these areas can be market stoppers. They can be market reversers, or they can create bounces that are too big to trade. So to identify them, it's a pretty simple process. The first thing that has to happen is price reaches an area. Not the trigger lines, right? Not gets close or 10 ticks away. Price reaches the area. These red dynamic Renko bars work their way down and they come into contact with support. When they do, all you have to do is ask yourself, where are the trigger lines? And if the trigger lines remain above that area of support, well, then this area of support is behaving as an area that might stop the market. This is what we call a termination condition. Um, when you go and use one of those magenta lines, the cyan line is created when divergence prints, guys, and the cyan line doesn't print until about the third bar up here. There's calculations running in the background. So this isn't price reaching an area. It's when price comes back and reaches that divergence low, all of the trigger lines remain above. This becomes an area that we're not looking for any more short trades into. This is now a termination condition. And this is what we call a pivot stop out of a prior divergence line. This is your pivot, divergence prints. This is your stop out. And basically what that is this is the buyers letting the sellers think that they've won and then crushing them to the upside, guys. This is a very powerful termination condition. It becomes even more powerful when it coincides with Fibonacci. And this picture is a great picture reminding you that 90% of what you do during the day is going to be reading your indicators and waiting for advantages. Because price moves up to resistance and all of those trigger lines remain below, therefore we're not looking for a trade into that area. The market pushes down all the way to support, all the way to this mid band, and none of the trigger lines even follow. They don't break through. This becomes an area that's acting as a termination condition as well. So I can't go long and I can't go short. 90% of what I'm doing throughout the day is reading my indicators and waiting for advantages. Price moves all the way back up to this divergence high, to these two areas of resistance. The trigger lines remain below. Still can't go long because I'm into that termination condition. And guys, this is where a lot of you are going to be like, oh my gosh, I've been waiting for 40 minutes and nothing is set up. When am I just going to get to take a trade? Well, when this termination condition creates a full reversal, meaning that the large triggers go from small or from green to red, the smaller below, ultimately it gives you odds favorable momentum. And there's one of those tails, guys. That's your highest probability trade. That's the one that typically wins 70 to 80% of the time. Guys, when you sit through the indecision and you wait for the advantage, this is the trade that meets your daily goal, right? This is the trade that gets you where you want to be, that gives you that success, that confidence from success. And I'm going to give you guys this picture, and I want to remind you, trades don't happen every second of every day. You got to be just a little bit patient, but you wait for the best of the best, and it's going to create opportunities. Price reaches these one-to-ones. When price reaches these one-to-ones and none of the trigger lines break through, guys, this is acting as a termination condition. And if you look at the bounce that it creates, you can see how that area becomes untradeable to the short side. This is your giant red flag. This is your safety net, guys. 60% of the time, these work every time. When this termination condition creates a full reversal, gives you that odds favorable, there's another one of those tails, guys. There's that best of the best. That's the one that brings you all the way up to that next key Fibonacci area. That's your highest probability trend trade, the one that typically wins 70 to 80% of the time. So when we talk about termination conditions, guys, we're going to keep it as simple as possible in the beginning. Price reaches an area, absolutely no triggers break through, guys. This is a termination. This is an area that may stop the market. This is not a clear path. This is forfeiting that second advantage that our rules provide. Well, when do we have that advantage back? When both the small and the large triggers break to the other side of that area, now we have a clear path. Price reaches it, sit on your hands, wait a minute, and then small and large triggers break through. Now the path is clear. There's that odds favorable momentum, and there's another one of those tails pushing us up to the next key Fibonacci area. If you allow it to be this simple in the beginning, price reaches, no triggers, no trade, small and large to the other side, now the path is clear, now I have a trade, guys, it's going to help you stay out of trouble. It's going to keep you from trading into these maybe trades, these areas that have the potential to break but don't. And I'm going to introduce you to that look when areas have the potential to break, and this is going to be that second trade that we talked about. This is going to be that medium probability trade. And again, no triggers, no trade, no clear path, not doing it. Both triggers, the path is clear, looking for those opportunities. Sometimes those odds favorable momentum triggers, those strong trigger lines are going to break areas. Strong triggers break things. And it begins with the small triggers through the area, and the large triggers will be trailing behind. They'll be lagging behind the area. This is what we call a 50-50 look. And not because it has anything to do with your chances of success, but everything with the position of the trigger lines. 50% of the trigger lines are above the area. 50% of the trigger lines are below the area. Guys, this is a 50-50 trade. This is not a high probability trend trade scenario because 6980 has the potential to break with all that momentum, but it's not broken yet. It's not a clear path. And if it's not a clear path, then rule number 2 hasn't been met, which means that we do not have the advantage, which means it can't be a high probability trend trade. So on these 50-50 trades, if we forfeited a clear path, guys, it's imperative that momentum and a small window of opportunity, a small entry area, are present. So we're going to talk about that 50-50 trade in a little bit, but we're going to focus on the high probability trend trade initially. And I'm going to show you guys some pictures. I share a lot of pictures in class. If you're brand new with me and you don't own all of these pictures on your computer, steal them, take them, download them, save them to a file, put them in your spreadsheet. These are termination conditions at a high point, guys. And the recipe is exactly the same. Price reaches an area, triggers must remain below. Here's one of those pivots that creates divergence, lets me know there's a loss of momentum. Here's price reaching it. None of the triggers breaking it. Now it's a termination. Resistance, triggers below, no long trades. One-to-ones, triggers below, no long trades. This is your safety net, guys. This is going to keep you from hoping that areas break. Same thing happens at a low and the recipe doesn't change. Price reaches the area and the trigger lines must remain above, whether it's one-to-ones, Fibonacci support, or one of those divergence lines. Guys, is everybody comfortable? I see we got some new people popping in the room here as well. Is everybody good with that simple recipe to determine where the market may stop? Price reaches it, no triggers through. Guys, sit on your hands. You don't have the advantage of a clear path. And once again, let's go to that live market and let's take a look at Fibonacci. Price reaches Fibonacci support. Absolutely no trigger lines break through, and it runs all the way back up to Fibonacci resistance where the trigger lines don't break through. There's one of those 50-50 trades, right? The smalls break through, but the large don't. Ultimately, the area doesn't break. And you see this all day long, guys. There's that consolidation point that we looked at. Lady P, do you remember those areas where you get chewed up a little bit? Not only do your trigger lines not agree here, but rule number 2 hasn't been met. Next-gen users don't get chewed up in consolidation unless they make the choice to create opinions, right? And now we're into resistance holds, pushes back to support. Guys, look what's happening right now. Right back to resistance, creating a pivot stop out. The patterns and the market repeats itself every day. Guys, there it is, straight from the manual, and this picture was taken back in 2021. Price reaches resistance, pushes down to support, comes right back up. You're going to use it, K-Pops, just don't do it. Look at this one from 2.5 years ago, and look at what the market's doing right now. Patterns repeat themselves, guys, over and over and over. And what we're doing is we're recognizing the patterns that bring us success, and we're recognizing the patterns that rob us of that ability to be successful. So termination conditions, giving us a clear path. Sometimes the market has a clear path. And when it has that clear path, it still turns, right? Sometimes it has odds favorable momentum and a clear path, and it still goes the other direction. This final termination condition is going to help you identify change that's happening that you can't see on the large chart yet, guys. And it's 3 divergences in the same price range. 3 losses of momentum in the same price range may terminate the trend. It may push it the other direction. Gary, have a great afternoon. We'll be here. Guys, these 3 losses of momentum may terminate the trend. It becomes even more powerful when that third divergence happens with the small triggers inside of the large. Those anything can happen triggers. Becomes more powerful still when your third divergence is higher than the previous pivot from a low or lower than the previous pivot from a high. It's a head and shoulders pattern. So guys, you're going to see this 3 divergence look, these 3 losses of momentum on your smaller, faster chart. And this look at a low and this look at a high is going to help you identify the change that you can't see happening on that larger chart. And that's the only termination condition that I'm giving any credit at all on that smaller, faster chart. So guys, so far we've talked about, whoops, where did my picture go? We've talked about the advantage of momentum through strong triggers, right? We're looking at that large chart. Whoops, and that large chart, I'm not going on break. With those strong trigger lines provides the advantage of momentum. We're remaining on that large chart. We're letting the large chart lead the way, and we're making sure that there are no termination conditions, no areas that may reverse the market, that may create a bounce. So when we have momentum and we have a clear path, guys, we're 2/3 of the way to a high probability trend trade. Now all you need to do is find your entry area. Let's refine that broad stroke of a brush, right? We've identified direction, momentum, and areas. Let's take that broad stroke and let's refine it on the smaller, faster chart. Let's pinpoint with pretty amazing accuracy where that market is likely to continue. And that refinement process looks a lot like this. One bar on the large chart gives me momentum, gives me a downtrend, and it also gives me a clear path. And inside of this one bar that I circled in black, all of these bars are what's going to get us to that best of the best area, that point where the market is likely to continue. And we're going to do that through a pretty simple process. Rule number 3 says that we're going to use a limit order to buy or sell a pullback in an area inside of favorable large triggers. Using a limit order means that we're literally going to wait for the market to come to us. Guys, we're not going to chase these trades. We're going to sit with an order at an area inside of favorable large triggers. And favorable large triggers are defined when you're when you're large and your synthetic triggers on your small chart are overlapping. They're strong in the direction of the trend. In an uptrend, they should be up, they should be wide, and they should be one on top of the other. This is going to give you the smallest window of opportunity, the smallest point where the market is likely to continue. And it's that small window that's going to allow you to reduce your risk, that's going to allow you to maximize your profit potential. So when we look for those favorable large triggers, when everything says up on the large chart, when the momentum is the strongest on the large chart, when the path is clear on the large chart, you're going to turn your attention to your small chart, and it should look like this. You should have strong triggers. Small's above the large are wide, they're angled in the direction of the trend, open, space, right? Those synthetic triggers should be right there with the large triggers. And you're just going to look for your areas. And your areas can be Fibonacci, mid bands, or yellow 1-to-1s. All high probability trend trades originate at a line, and those are the 3 lines that we're looking for: fibs, mid bands, yellow 1-to-1s. Everything says up, the triggers are strong, we've identified our areas that may fall inside of those favorable large triggers, and now we need a pullback. We need a small retracement in price that's counter to the underlying trend. And that pullback begins with a reversal bar. And at the time of this red reversal bar, you're going to create a window of opportunity. Most traders in the beginning will use one of their drawing tools on NinjaTrader, right? I'm looking for the top of the triggers to the bottom of the triggers, and I'm looking for the areas that are going to fall within, those fibs, those mid bands, those 1-to-1s. This creates the window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers. Or if we're looking for a short trade, it's going to be from that lowest point of resistance to the highest point of resistance inside of favorable large triggers. This window of opportunity is the area where the market is likely to continue, and we're going to right-click at the top of that window and activate a limit order. And only 1 or 2 things are going to happen, guys. It's either going to come down and you're going to get your order filled, and you're going to be in a long position at 79.21 right at the top of that window, and you are going to be long with the advantage of momentum, and you're going to be long with the advantage of a clear path, and now you're long with the advantage of an entry at the point where the market is most likely to continue. Every trade you enter, you should have a stop in place. Your protective stop is going to go below those 1-to-1s, below those large triggers, and it's going to go where the market shouldn't go. Guys, this is your protection. This is going to say that if the market extends beyond that window of opportunity, I no longer want to be in the trade because my advantage is gone. Guys, this high probability trend trade is a trade that typically wins 70 to 80% of the time. This is the hardest part for new users to swallow. That means that 20 to 30% of the time, guys, that 7 or 8 out of every 10 trades are likely to lose. 20 to 30% of the time, we're going to allow the market to be wrong. 20 to 30% of the time, it's going to be no different than paying rent on your storefront. It's a cost of doing business. So you begin to build trust in this methodology. You're going to go back and you're going to study this methodology, and you're going to realize through your own study that this is a methodology that does in fact win more than it loses, that it creates an opportunity for success. Our limit order goes at the top of the window because of the momentum on the large chart. Every time you take a trade, I want you to mentally be prepared that it may go to the bottom of the window, right? That it may go to your stop outside of the window. And don't get caught up on fluctuations on this smaller, faster chart. Remember, it's the large chart that leads the way. Before the order was hit, the market pretended like it was going to go up on this small chart, but it didn't. It continued, and it repeated the pattern that we've seen thousands and thousands of times. If you get in up here, your risk grows exponentially, and your profit potential decreases considerably. So guys, we're going to look for the best of the best, right? We're going to look for the entry inside of favorable large triggers, and what you're going to find is that this will become a trade that you'll never miss once you trust it. Because 70 to 80% of the time, this is your result. Profit target reach. The market's going to go in the direction of the trend with the momentum, with that clear path, and it's going to look for that next key Fibonacci area. Once you get a reversal bar in the direction of the trade, you're going to reduce your risk below that reversal bar. And it's not uncommon for me to see pictures in this room of you guys having 2 to 3 ticks risk, making that $300 to $400 profit. The idea is that it's time to build trust in this one, guys. It's time to recognize the trade, to be able to identify it in the moment. In the beginning, the market's going to feel like it's moving so fast, right? That's why study, that's why presenting your pictures in class is so important. Because the more time you spend recognizing the best of the best look, remember I gave you 250 pictures of the best look? The more time you spend committed to just clicking on these, let's take a look at what this one looks like. Small's below the large are wide, they're angled down. Perfect entry at a mid-band inside a favorable large triggers, clear path. The more of these pictures that you open and study, the easier it's going to become to recognize the look, right? And the more that you simulate it and practice it real time, the easier it's going to become to catch them. But until you get to that point, you can go historically, guys. You can scroll back on your large chart. You can look for odds favorable momentum. You can look for that clear path. And if you circle that tail, see if it lines up on your smaller, faster chart. See if it gives you that area inside of favorable large triggers for continuation. We're not trading tails, we're trading areas. And if we go back to our live market, I'm going to show you how to study. And guys, NASDAQ is caught in a path right now. Let's take a look at this one. Everything says up, the triggers are strong, everything says go, and let's scroll back and see what it looks like on a smaller, faster chart. The market pulls right back to support, right there at favorable large triggers, guys. This is going to be the look that you're looking for. This is going to be the one that pays the bills. This is going to be the one that gives you the highest chance of success. And when a termination condition creates a full reversal and provides you odds favorable momentum, once again, it pulls right back to those areas of resistance. And we're going to study this every day until it becomes easy. And you're going to study it not only on one market, but you're going to be able to come back and you're going to be able to start looking at all sorts of markets coming through. This is the S&P, and this is a termination that created a full reversal. There's one of those 50-50 looks, straight to support, and it's working its way out, right? Is everybody comfortable with this? Highest probability trend trade, best of the best. Let the large chart lead, let the small chart refine, And all we're going to do is go through repetition, guys. You're going to keep seeing these, taking pictures until it becomes easy. And I'm going to give you guys a trend trade checklist, and that's way too small. So let me zoom this in real quick. Guys, this is your high probability trend trade checklist. This is making sure that the rules are met each and every time that you take a trade, making sure that you write your rules on the chart each and every time that you take a trade. I'm going to give you this checklist, and I want you to start policing yourself. I want you to start focusing on trading the rules and not your emotions. This is your simple approach, guys. This is your best of the best. This is the one that teaches you to read your charts. Don't bypass that part of the education where you learn to read your charts. For those of you that need it visually, here's the exact same checklist with pictures liberated straight out of the user guide, making sure that you understand what it is that you're looking for, what the looks are, what the advantages are, how to identify those broken paths, how to recognize a window of opportunity. And it all goes back to the checklist, right? Making sure that you can say yes to each and everything that you do. And then finally, guys, news at 10. Thank you, Debbie. 2 minutes on news. I'm going to give you a simple plan for consistency, guys. And this simple plan for consistency is focused on advantages. It's focused on the best of the best, the easiest, giving you the highest chance of success. There's two types of people. There's the people that want to catch the best trades, right? And they want to have the most contracts on the best trades because it's their highest chance of success. And then there's a lot of you that want to catch all the trades because you don't want to sit on your hands. You'd rather be busy than profitable. And I see this every day. This simple plan for consistency is designed to put you in a position to take those best trades. You guys want to see what the market does at news? Let's go to the NASDAQ. Let's see how it reacts. We have news in 1 minute, guys. Let's see if it moves the market. It may not. I don't know. We'll do it just on a large chart. Make sure that I'm scaled in. 9:59, news release, high impact. It could move the market. It could make it bounce erratic. It could make it untradeable. Or it could do absolutely nothing. But watch that lead bar. As they gear up for it, see how they're fighting? Buyers and sellers anticipating, waiting for the news. 10 a.m. Let's see what happens. Oh, look at that fight right at the key areas. Buyers and sellers are absolutely duking it out. Sellers push them down to support, and the buyers say, you know what? I love Fibonacci. Let's come off of that support and let's try and push back up. Let's see if it gets to that next key area. There's the push, my trigger line's up, boom, right into the next area where it may react. Let's see if the buyers have it in them to break through that key area that the sellers have held twice. There it goes. The small triggers are through, but the large triggers aren't. And the sellers say, you know what, buyers, we're going to try. We're going to react to this key Fibonacci area, and we'll see if they win. So far, so good, right? Right back to that area. Guys, it wasn't the craziest of news releases, but look how Fibonacci held. Look how it held, and we're identifying this fight, right? We're seeing these areas. Guys, when I see this, I'm saying to myself, 15801 has to break before I look for longs because they've already held it 3 times with losses of momentum. And I'm saying to myself, 8650, man, this has got to break because look at how many times it's held. So we're going to let them create the advantage. We're going to let them create the momentum. We're going to let them create the clear path. And if they do, you better believe we're going to wait and we're going to jump on it, right? There's a fib and the triggers haven't broken through yet, which means that it's a termination condition, which means that I'm not going short at the midband, which means that my rules probably just kept me out of a loser. And guys, that's what we're going to focus on all day, each and every day, waiting for the advantages. They happen. Look at that, guys. Rule number 2 kept you out of a loser. They're designed to keep you safe. Divergence on a 50-50 trade keeps you out of a loser. Trading into a Fibonacci area keeps you out of a loser. And sometimes it's not necessarily all the winners that you take, it's the losers that you avoid. Does that make sense? So let's talk about finding the best of the best, guys. It starts with never fighting the large chart direction or the triggers, ever. There's no reason to. At that point, you're just trying to predict. Guys, excuse me, just 1 second. All right, I'm back. Rule number 1, guys, always kiss your wife goodbye. Never fight the large chart direction. Never fight the triggers, guys. That's momentum and trend going against you. Your first 20 days with Nexgen, I want you to focus on nothing but entries. I want you to focus on the absolute best of the best, and I want you to focus on the reasons to win, not the reasons that it might lose. Does that make sense? A lot of times you're so focused on wanting to win that you're focused even heavier, usually subconsciously, on trying not to lose. And you're going to create all of these problems for yourself. Keep it simple. Focus on 3 advantages. Focus on the best of the best. Focus on odds favorable momentum, strong tops and bottoms, nothing in the way. Make sure that this checklist is met to define your entry. If you're doing that, I've never had anybody follow this checklist and do less than 70% winners, ever, in the history of the checklist, guys. And then what happens is, remember when I said every great entry has a management opportunity? Every great entry is going to need to be managed. You're going to have to do something with that amazing entry. What we have found over the years is that a methodical, pragmatic, mechanical approach to management is the most advantageous for new users, because remember that these rules teach you to read your charts. It's your chart reading that teaches you to manage your trades. So we're going to use that initial stop outside of the window of opportunity. And what that looks like is when we enter the market at the area of resistance inside of favorable large triggers, our initial stop is going to go where the market shouldn't. That's too big. I'm going to trade 2 contracts. I'm going to take a rules-based entry, and my stop is going to go where the market shouldn't, outside of the window of opportunity. Guys, this is typically 12 to 14 ticks when you're futures trading on the S&P, on crude oil. If you're trading the NASDAQ, 24 ticks, right? It's the same monetary value. It moves in different ticks. So once we have the entry, the stop is in place, there's absolutely nothing for you to do, guys. Either this market goes up and it hits your stop. It's one of those 20% losers. It's one of those costs of doing business. You're going to dust off and wait for the next advantages. Or the other thing is going to happen where you get a reversal bar. And if you get a reversal bar, now that risk is reduced, right? Now you have less risk on the trade. It's gone in the direction of momentum. It's gone in the direction of the clear path. And the only thing to do at this point is you're either going to get your stop hit, right? Small loser, it's okay. Losers are a normal part of a positive equity curve, or it's going to hit your first target. And your first target's only $100, guys. $100 doesn't feel like much, does it? But at $100, there's a dopamine kick, and you're like, oh my gosh, I just want to trade. There's money in the bank. They can't take that from me. That's mine. And then you're going to move your stop to break even. And you're going to say, not only did I get paid, but I have zero risk on this trade. Zero risk. And it's going to make it easier for you to trust that large chart, to trust that momentum, to trust that clear path, and see if your next target gets hit. And your next target's only $200 as a brand new user. This is mechanical, methodical, pragmatic. There's no room for opinion. If it reaches your second target, guys, you're out with $300. $300 on a high probability trend trade that had every advantage present. $300 that if you do this once a day, turns into a $1,500 week, and it turns into a $6,000 month. And guys, a $6,000 month translates to a $72,000 year. The absolute best of the best trade. What happens when that 2 lot becomes a 20 lot or a 100 lot, right? The same trade. You're just compounding. You're not increasing risks. You're not looking for more trades. You're taking the best trade and you're looking for more contracts on it, guys. And that's what we're going to focus on in the beginning. And this simple trading plan is designed to keep you focused while you learn to read your charts. When you're comfortable with your chart reading a little bit, we're going to go to that first medium probability trade. And our first medium probability trade is that 50-50 trade, that area with the potential to break. But I'm going to go through the definition of a medium probability trade because I think that this really sums up how you have to approach them. A medium probability trade means that most of your indicators line up for a trade. However, a small issue exists. Guys, your ability to read your charts is going to identify that small issue, right? And in the beginning, that small issue is going to be the fact that an area hasn't yet broken, but it has the potential to. This is going to be the vast majority of your trades, guys. You're going to sacrifice on a lot of trades one of those advantages. This particular trade sacrifices the advantage of a clear path. When you're executing a medium probability trade, you're going to have to take these trades and manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. You will identify the trouble spot, that area that hasn't yet broken, and you'll be able to take profits at that spot. Get to break even quickly, right? So if we're giving up the clear path, it's imperative that we don't give up momentum or that small window of opportunity. And your simple plan addresses that, and there's a checklist for the 50-50 trade. And the first thing it says is one area not broken, right? One area not broken, not multiple fibs that haven't broken yet. You must have odds favorable momentum on the 13-2. You want odds favorable momentum on your small chart. Remember, we're giving up the clear path. We're not giving away momentum. No divergence on the 5-1. What does that mean? That means that there's no loss of momentum because once again, if we're giving up the clear path, we're not giving up momentum. Ideally, we want it coming from a good top or bottom, right? From a termination that creates a full reversal. And then we're going to enter at the area. If the checklist is met, we're entering at the area. Notice that for a second time, it says divergence, no trade. And then you have to manage a 50-50 different than you would a high probability, right? Because you have to manage it assertively. We're still using the window of opportunity. We're still using the reversal bar. But notice for the third time in the simple plan, it says if divergence prints, exit the trade. Now we have a simple if-then scenario to keep us focused on the best of the best. First contracts at the trouble spot. Get to break even because it's not a high probability trade. These typically aren't home run trades. Get those quick profits on the second. Guys, this trading plan is designed to keep you focused. Focus on success and simplicity first, and then focus on moving into that next phase. Focus on those momentum trades, those HVA trades, all those other ones. So PFI, I'm taking a quick look at your trade, and let's talk about it. But can I show you something? Are you using Snagit or are you using Capture software? TechSmith Capture. The snippet tool, is that Snagit or does it look like this? That's the one? No? Look like this? Comes with the PC. Okay. So let me help you just a little bit. Let me help you help me. When you're taking a picture, PFI, do me a favor. Take a picture of your large chart and your entry chart. And if you do that, what this is going to do for me is it's going to allow me to see the large chart leading the way, right? Making sure that we have odds favorable momentum, making sure that there's nothing in the way, no worries. And then the small chart, guys, you're going to be able to show me made in. So I'm going to line the two up and we're going to go through that checklist together and we're going to make sure the question was, did I break any rules, right? So then we go back to this idea, guys, that your rules belong to you. Your rules are not my rules. The high probability trend trade rules have to be owned by you. It has to be Ace J's rules, right? It has to be M's rules. It has to be K-pop's rules. It has to be David B's rules. So I need you to write your rules on there. Tell me what you saw. Tell me why you did it, right? Even better, tell me, how did you feel when you did it? Does anybody besides me get sweaty palms when they break their rules? Does anyone else, when they know that they're taking an iffy trade, start doing this to your charts? I'm short, I better give it more room to run, right? I see it all the time. You pull your chart back over here and you're like, hey, Mark, how did I do? Yeah, the heart goes and it's crazy. So, guys, if you show me both pictures, right? If you show me both charts, what we're going to be able to do is we're going to be able to go back into these trades without adrenaline. We're going to go back into these trades without the thought of winning, without the thought of losing. And we're going to be able to objectively look at whether or not the rules are met, whether we had odds favorable momentum, whether we had no termination conditions. Um, so PFI, if you can get me both of those, that would be awesome. But one of the things that I can tell you just by looking at this chart is that we didn't get a pullback to an area inside of favorable large triggers, right? And I noticed that both your large and your synthetic triggers are down. No, you can't screw up. You're new. Let me be very clear on that. You can't screw up because you're new. So let's see what your large chart said. Yep, you got caught in the news. So I'm going to focus in only on your large chart. And we're going to do that first. So on your large chart, the first thing that sticks out like a sore thumb to me, PFI, is that you traded directly into one-to-ones that absolutely no trigger lines had broken through. Do you see it? And guys, this is why posting pictures is so important. Rule 2 says that we need a clear path. So we know just from this picture, Rule 2 not met. And that's okay, man. I want you doing this. PFI, true story. I was the trade indeterminations king. So just quick glance, I know that we're trading into a termination condition, but I'm a huge, yeah, it is. This is your second trade. But I'm a huge fan of where you entered it. And I'm going to tell you right now, guys, PFI, if you're nailing this entry, see, there's that opinion, right? It was your opinion that the trade was going to continue. But your indicators said that you'd reached a point where it's likely to stop. Does that make sense? I hoped that this area with no trigger lines would break. So what I did is I let a beautiful looking entry on my small chart outweigh the large chart that should have led the way. PFI, I don't think you have any idea how amazing this picture is for a lesson for everybody. I could teach a class on this entry because it's beautiful. And if the conditions were right on the large chart, this is a trade that typically wins 70 to 80% of the time with that look. We just had to wait a minute, right? Just had to wait for that clear path. Down here, you had that termination to termination. The trigger lines roll, and that long trade that you took in, it's a momentum style trade. Still a little aggressive because it's not coming from a great termination condition. It's not coming from that strong top or bottom. 17 ticks. You said 17 ticks with 3 divergences? 3 divergences in the same price range. Smalls above, so you said, you know what? I'm going to take a chunk. Is that about right? That's a hell of a chart read, PFI. And this trade becomes even more strong when this termination condition is really solid, but you waited for it to get to the right side of everything, right? You waited for three divergences, which you know may push the market up, and you waited for that momentum, those strong small triggers on the small chart, and it cleared the area. I like it. It's not a high probability trend trade, but now that I know what you were thinking, right? Now that I know where your head was, I can say, you know what? With this divergence, with this termination, with this weak trigger look, and then coupling that with multiple divergences on a smaller, faster chart, it creates the opportunity with that push up to get to the next key area, and that's exactly what it did. And then when we got to that next key area, we reached it, right? Target reached, which is why we don't take this one. Beautiful trading, PFA. Nice job, PFI. And guys, this is what we're going to do every day. We're going to look at your charts and we're not going to talk about them, whether or not you're a good person or a bad person or whether you broke all the rules and shame on you. What we're going to do is we're going to look for advantages, right? We're going to look for reasons why things worked out the way they did. And then we're also going to look for reasons why perhaps things worked out the way they did. And then we're going to start doing this, and this repetition every day is going to create an opportunity for you to repeat those things that are bringing you success. And then PFI is working on this one right now. Weak triggers, three divergences, bodies break above. Maybe he's going to get paid on that one as well. I don't know. Guys, you're going to take your ability to read charts, and from that ability to read charts, you're going to create trades that you're comfortable with. But every trade that you take, I want you to have a plan for. I want you to have a reason that you take that trade. That's why we create the trading plan, guys. That's why we focus on having a set of rules to get us in and out so that it's repeatable. And we make sure that those rules are met each and every time before we place that limit order, right? 50-50, smalls below, large above, divergence prints. Maybe I need to cancel that order because my rules aren't met if I go to the checklist. So guys, this is our first hour. This is the first hour every day. We go through this foundation. We talk about reading charts. I beg and plead with you guys to keep it simple and focus on the reasons to win, right? Focus on the advantages in place. Focus on why your trade has a higher chance of success. 50-50 trade, multiple divergences. How many times do you have to see this before you stop taking it? It's a medium probability trade, and you're just giving away advantages. Guys, I'm going to take 5 minutes. I'm going to go stretch my legs, breathe through my eyelids, those things that I do. When I come back, we're going to start looking at the trades that you guys are taking. We're going to start looking at your charts. If you have questions, I want you to post them in the room. Um, I'll be back in about 5, and we will get back to it. Stretch your legs, guys. Everybody hear me okay? Let's get into that second hour. Let's start looking at some charts. See what you guys have been doing. Awesome. So guys, when I scroll through and I look at charts, I do have to go all the way up to the top of that chat box and all the way back down. So I'm going to do that. If I miss a question, if I miss a chart, do me a favor, let me know so that I can come back through and we can talk about it. It's kind of cool. A lot of you guys started posting some stuff yesterday too in the afternoon. I tried to get to it if I could. And I think I gave thumbs up and feedback on the ones that I saw, but I'm going to get this first one. Here we go. And let's take a look and see how we fit rules, guys. It starts off with, is it a good bottom? Is it a termination condition that creates a full reversal? The answer is absolutely yes. Odds favorable momentum is in place. Small's above the large are wide. They're angled in the direction of the trend. So guys, so far we're 2 for 2, right? But it's a 50-50 trade. It's been identified as a 50-50. It is not a clear path. Should I consider this as a term instead of a target? 7861, Joel, was that the area that you were talking about? I see you made it back to the room. I hope your injections went well. So guys, let's talk about the 50-50 and let's address the question. This area isn't a termination condition because price didn't reach it and trigger lines didn't stay below it, right? So this termination is what we call that 50-50. It's an area with the potential to break, but it hasn't broken yet, which means that on a smaller, faster chart, when we refine it, we're not going to give up the advantage of momentum, right? No divergence. We have strong triggers. All of these are part of the checklist. They've been met. He's created the window of opportunity, and he's managed it assertively because it's a medium probability trade. And when divergence printed, he exited the trade. Joel, I'm not sure if you're listening or not, but this is perfect execution on a medium probability trade. This is taking a trade without the advantage of a clear path, not giving up the entry area or the momentum, taking quick profits at the trouble spot, and then when divergence prints, you exited. That is 100% textbook, guys. That is beautiful management on a 50-50 trade. Not a lot of pictures today. Market's been in a big fight. That's one thing that I've noticed. So we may have to just talk about a bunch of stuff, right? And I'm okay with that. I like talking with you guys. Ziba, let's see what you did. All right, let me see. Not a 50-50. You have a clear path, Ziba. Guys, can you hear me? Give me a Y in the room if you can hear me. Anyone else? Yes? Okay, cool. Joel, you may need to reboot. So Ziba, you think, okay, so you're saying the 50-50 on the midband. So let's go through, guys. What a great lesson. Thank you, Ziba. Let's go through and let's talk about when a midband behaves as a termination condition. So we're going to go straight to the rules once again. And I'm going to go to termination conditions defined. And guys, this is one of the reasons why you posting pictures is amazing, because if there's any sort of misunderstanding, we get to clear it up, right? We get to change your thought process a little bit. So Ziva, a midband on your large chart behaves as a termination condition if the large triggers are a full bar away. And you may remember this one. This is what we call the gap theory, guys. The gap theory says that if price pulls away, they looked off. Lady P, do you still have your Ninja Trader icon up in the toolbar? Okay, but they're all missing. If you hover over it, does it show you the charts? Or is it only the NinjaTrader control panel? I'm trying to see if did you close them out with the red X? Oh, okay. So let's talk about closing workspaces real quick then. Um, so here's what I need you to do. Because because you X'd out of them. So what I want you to do, and it'll be pretty much the same thing. I want you to go File, Workspaces, and you're going to see those workspaces lined up, right? So what you're going to do is on NinjaTrader 8, when you see the workspace, you're going to have the option to close it. What I want you to do is I want you to close the workspace that you X'd out of, but do not save it. Does that make sense? Close it, but don't save it, because we don't want to save the fact that you X'd out of it. And let me pull up, I'm pulling up my 8 real quick so that we can do this for you. All right. Let me pull mine up real quick so that we can get on the same page. It'll be easier visually rather than trying to make you use your imagination. The same way I ask you guys for pictures, I'm going to do you the same courtesy here. Mine's loading up real fast. Almost there. Here we go. So what you're going to be able to do. So when you go to workspaces, you should have this whole list, right? I don't have any workspaces open, so let me just open one real fast so that we can go through the whole process of how to close down a workspace. Because this is important stuff, right? So you'll see that crude oil is up. I've got the green box next to it, and I know that it's a part of it. So if you go through and you X out, what you've done is you've literally just gotten rid of those charts. So what you need to do is if you X out of your charts, guys, do this. Go ahead and close. Do you have the close option, Lady P? Cool. So hit close, but when it asks you if you want to save the workspace, I want you to click on no. So just go no, and that workspace goes away, and then go back to workspaces and reopen that workspace. And what that's going to do is it's not going to save the change that you made by Xing out of it. And it should come up like it was. And then from now on, whenever you want to close a workspace, don't X out of them. Go workspaces and then just close it. And that should fix the problem for you. And let me know if that works. And then if you don't X out of it, then it's okay to save your workspaces so that you can have any changes saved. And let me know if that fixes it. Woohoo! I love it. Lady P, I've made every mistake known to man. There's virtually nothing on the basic level that I can't fix. Jason will get you on the tech issues, but that's one that I've messed up. Repeat how to save. When you hover over that workspace and you hit close, it's going to ask you, it's going to prompt you, would you like to save? And if you X'd out, no. And if you haven't made any mistakes on it or deleted a chart, just hit yes. And all of this is going to be also in the software user guide. Absolutely. Hey guys, this is what the class is for, right? But all of your NinjaTrader stuff is also going to be right in here. And that's going to help you out a lot. Let me give you a link to that just in case you're doing this and class isn't going on. All right, and I apologize for the digression there. So Ziba, let's talk about the gap theory, guys. When is the midband a termination condition? The midband is a termination condition if the large triggers are a full bar away, because if price pulls away from synthetic triggers fast and far, it typically snaps back to the large triggers. We call this the gap theory. So Ziba, a midband is going to behave, let me find a picture with a midband. A mid-band is going to behave as a termination condition if the large triggers are a full bar away. So if the large triggers aren't a full bar away, Ziba, it's just a line on your chart. So when we look at your picture, we're in a good spot there. So you have a totally clear path coming from a termination condition. Make sense? And then you take the perfect entry, right? Pull back right to the mid band, right there inside of the large triggers. But look where your stop is. Your stop is above those synthetic triggers. Your stop is right there at those one-to-ones, and it got you, right? Just a little too tight there. You've got to wait for that reversal bar to print, and then at that point, it's pushing up. Two divergences don't scare us. It comes right back to that area of support at the triggers, and that momentum, that direction, that clear path finishes as a move right to Fibonacci resistance. Guys, and this is why that's awesome. I'm glad you did. Could have made a lot more money, right? Hey guys, this is why the large chart leads the way. Ziba, I love money every time, right? You heard both target and stop at the same time? That was your stop. That was your stop. That was your target. I'm not sure. That's weird. But do you see how the large chart said up, right? The large chart said momentum. The large chart said clear path. And look what it did. It went straight to those key areas. Guys, you're going to freak yourself out on a smaller, faster chart. Does anyone remember what's the only termination condition? When I have odds favorable, when I have a clear path, the only termination condition that I'm really giving any credit on a smaller, faster chart is three divergences in the same location. And if that doesn't happen, I'm staying in the trade because the large chart says up, because the large chart says clear path. So Ziba, it's a great trade. I like your entry. You just got a little jumpy with your stops. You didn't give it an opportunity to do what the large chart said that it was going to do. Does that make sense? Great entries create manageable trades. Was that the first trade of the day? That was that. Oh, here I go. I don't want to lose the first trade move. Yeah. You think that was your internet? Hmm. I don't think so. I think that was all you. That was your stop in the wrong place. No worries. And then you caught your first target. And then you closed it out right there as it pulled back to the small triggers. It kind of tells you. You hit a target, you hit two stops, and then the close button was pushed. Hmm. That's weird. Cookie crazy. I love the setup on the large chart. A little bit of management makes that one a bigger winner. Nice job, Ziba. Telling you guys, great entries create manageable trades over and over. Man, there's not a lot going on today, huh? Here we go. Ziba, once again. I love it. Whew. Testing my eyes. Everything says down. The path is clear. You take an entry, you're using those purple one-to-ones. This time stop keeps you safe, and you take it right down to the Fibonacci area. Ziva, well done on this one. Trading with direction, right? Trading with everything. Going the same way. And it's amazing. When everything says down, the market's likely to go down, and Ziva, you capitalized on it. Nice work. I think I've got like 6 pictures posted. And PFI, we looked at yours already. Ziva, once again, from 10:20 a.m. Same trade. Broke your clear path. Small triggers on charts were strong. Let's look again, though. You have weak triggers, and you have weak triggers, right? So the small triggers are down, but they're inside of the large. So we've weakened those large a little bit. Let's talk about that. But the path is clear. It's coming from a good top. Everything says down. You're really just relying on that downward push to get you to the next key area, and it does. But remember the difference between strong triggers and weak triggers, Ziba, is those smalls have to be outside of the large. That's your strength. All right, Safia, I gotcha. So Safia, your large chart says odds favorable momentum. Your large chart has a clear path, right? Everything says up. The path is clear. Those large have cleared, it looks like. Maybe not in the moment. You get the pullback. You take the perfect entry. Virtually no risk with the up bar, and all of that momentum takes you right to the next key area. Safia, how did it feel? Good trade, easy trade, confident trade? Finally good. And then for you NASDAQ users, Safia, look at the distance back to those small triggers. That idea, the gap theory, helps NASDAQ users a lot, I think. I love it. It's beautiful. And you had your target right up here at 66, right? Definitely could have made that target with this much momentum. Quick profits, quick profits. Beautiful, beautiful trade. There's no way to be mad about this. That's 7 points on, that's 21 points. That's $420 plus another 200. It's over $600 trade, Safia. How long did you have to wait for that trade? Hour? Few minutes? I didn't see any other trades on there. It's beautiful. Guys, this is it. That's the one. It can be done, but you have to be patient. You have to wait for it to set up. Nicely. Nicely done, Safia. And believe it or not, we are at the end of the pictures already. It's hard some days. And then Ziba taking a momentum style trade. Everything says up. The path is clear. You hop in. You love those purple one-to-ones. And held it all the way to the fib. Nicely done, Ziba. What a great job. Direction, momentum, everything says up. And Ziba says, I'm going up too. This isn't a high probability trend trade, is it? But it's a great chart read. The path was so clear. The momentum was so strong. Why not? Get paid. Debbie's my favorite cheerleader today. Guys, that's all the pictures that we have. Either you guys aren't trading today or there hasn't been a trade to take. Which is it? Either's okay. That NASDAQ's just railing up at this point, right? Weak triggers at resistance. There's divergence. Let's see if we can find something to talk about. There's one of those pivot stop outs of a divergence low. Ziba, do you see how the large triggers? Guys, let's take a picture of this one and talk about the gap theory real quick. Prices all the way made it to 46.02, right? Guys, this little white bar is your reversal bar marker. There is room for an entire bar to print before it hits those large triggers, which means that from the top of that bar to those large triggers acts like a vacuum. This is your gap theory. Gap theory doesn't say go short. Gap theory doesn't say go long. Gap theory just says that it's likely that price, let me swing this around, is going to close the gap to the large triggers, which means that any long trades in that area are more likely to get run over. That's all that means. But guys, this is one of those patterns that you're going to begin to recognize. You're going to begin to see this happen every day to the point to where you'll be able to open up a chart, mid-band hit, large triggers a full bar away. There it is. Mid-band hit, large triggers a full bar away. Patterns repeat themselves. Mid-band hit, large triggers remain a full bar away. You guys seeing this pattern? Over and over. Mid-band hit, large triggers not a full bar away. Pretty cool, isn't it? Mid-band, large triggers a full bar away. Guys, everything that we talk about in this classroom is designed to help keep you safe, to help keep you out of lower probability scenarios where you lose the advantage, right? A lot of you are saying, but it's a mid-band, Mark. It's a mid-band. It's not inside of favorable large triggers, and the gap theory is in place. So it creates an opportunity. Ziva, everything says, oh, no, I'm sorry. This is Safia. My apologies. Everything says up. You take your entry, you make your money. Everything continues to say up. You take your entry, you make your money. Look at that. 3 divergences in the same price range. Fibonacci, no triggers through. Great termination condition. Creates a full reversal. Safia, could you have come up with any more advantages? You could have. Or you could shut down right now with your goal met and go play golf. Go fishing. Go to the gym, sweat it out. Whatever you want to do, right? That's the beauty of trading, guys, is when your goals are met, hang out. Make your money. Then GTFO. Ace J, did you get in too soon? Ace J, did you notice that you don't have any indicators on your smaller, faster chart? I want you to do me a favor. Are you ready? This isn't too tech savvy. I want you to right click on your smaller chart and go to data series. And you're going to see a days to load, and it's probably going to say 10. I want you to do me a favor. I want you to change that number to 9. And then it's going to recalculate, and you should have indicators back on. Let me know if that works for you, and then we'll talk about your entry. And let's talk about all the goods, and we'll talk about the challenges. Let me know how that works, because I think we're looking at it right here on the S&P. Is that right? 4,625. No change on the chart? All right, so here's what I want you to do then. I want you to get with Jason. Or you know what? Maybe try this one first, Ace J. No, let's get with Jason. Have you worked with Jason yet? Let's just put a ticket in, and he'll get you squared away. Let me get you the link to tech support. There's things that I can try to talk through, and you and I can flounder for a little bit. I'm not really a tech guy. I'm a chart reading guy. There's the link to tech support. Put in a quick ticket with Jason. Let him know that you've got the gray screen. He'll be able to take care of you, no problem. And then what I'll do is I'll take the picture so that we can see both charts, right? Your entry, whoops, wrong one. Your entry was 40, 60, 25, right here. Sound about right? Right about there. So you with me, Ace J? Let's talk about this one. I send you on a task and then I talk about your charts. All right, cool, you're here. Awesome. So let's go through the goods, right? The trend is up. So you're facing the right direction. You're looking for that long trade. We're coming from a termination condition that created a full reversal. So far I love it. The trend is up. We have a strong bottom in place. The smalls are above the large and the large are wide. They're angled in the direction of the trend. So there's another one right there. And if we write our rules on the chart, write your rules on there. Is it a strong bottom? Yes. So I love that. Going through that checklist, right? Odds favorable momentum? Yes. Termination conditions. So this is the lesson that we just had, Ace. Um, when price reaches a midband and those large triggers are so far away, price typically snaps back and comes back to those large triggers. So as far as terminations, we kind of have a midband as a termination. But can we use our imaginations for a second and can we pretend like it doesn't? Are you okay with that? Not everyone can do that. I'm going to say there's no termination, right? We have odds favorable. We're coming. Everything's good. So rule number 3 says that my entry is going to come. I'm going to type out the whole rule for you. I'm going to use a limit order to buy or sell a pullback at an area inside favorable large triggers. So that's rule number 3. So Ace, when we look at yours, you have a 45.95 fib right there at the large triggers. Right on. And I may not here. Well, it doesn't change the fact, Debbie, that that gap theory is in full effect, right? But a 45.95 fibber kind of lets that gap theory do its thing. So, Ace, the one thing that we didn't get was that area inside of favorable large triggers. And that gap theory is still in effect, and we're just kind of in a holding pattern. So rule number 3 on that one, Ace, gives you an opportunity. Debbie said that she had a trigger down here at 95, which is right where that gap theory would happen. And it may happen and it may not happen. But what it is it's something that happens enough that we learn to respect it. And then crude oil right off of a termination condition, directly to a termination condition, and right back in. 90% of what we do, guys, is going to be sitting on our hands and just waiting. Smalls above the large are wide. Can we take that entry at the area? Put our stop below the reversal bar. Put our first target at $100. Use Fibonacci. What do you think, guys? Are we on the right sides of things here? So let's take a look at it. So Lady P, let's run through it. You're using capture? I'm going to pull mine up. I'm going to try to pull it up. Where'd it go? Give me just 1 second. My capture software likes to disappear. So I'm going to close it altogether from the background processes. Oh my goodness, guys. Look at that high probability trend trade. Just hit the target. Everyone always asks, do you ever trade live in class? Guys, I don't ever trade live for you to take trades, but what I will do is I will talk about rules. All right, let's see if I can get my TechSmith up. There we go. I got it. All right, so here's my TechSmith capture. Lady P, let's go through it. So I'm going to click and drag, right? And I'm going to get that large chart and the small chart. And when I release, it's it's going to give me the option to take the picture. And once I take the picture, it's going to give me that image preview. And when I have this image preview, this is where you're going to mark it up and write on it and do all those things you're going to do. Are you good with that so far? Nope. So let's go through the whole process. I won't go so fast then. Look at that, guys. We made $100 and then it stopped us out break even, slipped us a tick. Kind of cool, right? All right. So Lady P, where did my TechSmith capture go? Not again. All right. I'm so sorry. My TechSmith is being difficult right now. Let me kill it again with my task manager. And we're going to do a full lesson on this one. All right, so here's my TechSmith capture. Guys, I'm going to do the full old school lesson on TechSmith. I have to click the giant red capture button. Once I do that, it's going to let me pick the areas that I want to take a picture of. If I hover over one chart, it's going to take a picture of just one chart. But what we want, and this is for everybody, is I want my large chart and my small chart. So I'm going to left click in the upper left hand corner and I'm going to drag all the way down to the bottom right hand corner. I'm going to make sure that I get my timestamps in, guys, and I want to make sure that I get my prices in, because the idea is we're going to line these things up. So when you release that click and drag, Lady P, what it's going to do for you is it's going to give you the options. You can capture an image, you can take a video, you can adjust the size. I'm going to capture an image. When I capture the image, up comes my image preview. So far, so good? Awesome. So from the image preview, your tools are up top here. What I love to see, maybe circle your window of opportunity, right? That point where you're going to enter the market. If you have a target, it's okay. Point out that target, use the arrow. But the most important thing that you guys can do is use the call out button. And you left click and you drag down to the right and it's going to create a text box. And this is where I want you guys to write your rules, your questions, your thoughts, your hopes, your dreams, right? Share everything with me that you can possibly share with me, because the more information you give me, the more feedback I can give you. Once you have all of this in place, no problem. This is Capture Software, PFI. You should have it on your computer already. It's part of the software download, but if you don't, this is a free program. The Capture software is. It's awesome. It's simple. And the same company makes Snagit. And Snagit is what you guys see me using. It's the same thing as Capture, but it has all the bells and whistles to it. But you can write on your chart, you can take shapes, you can take arrows, you can even highlight things. Yeah, it's absolutely free. So the link that I just gave you, click on it. It'll take you 8 seconds to download it. Super easy, low maintenance. But it gives you a bunch of options. Once you get all this stuff on the chart, you can click the copy button. And when I click the copy button, what it does is it puts this picture onto my clipboard. And then guys, I just come straight over to the chat room. Whoops. There we go. Yeah, you have it. I come straight over to the chat room, and if you're in the pop-out version, guys, Control V is going to put that link in there, put that picture in there. Just hit enter. And now you've shared a picture. So now we can have a conversation about it, right? And here's the other cool thing, is if you click upload, Once you click upload, no worries, Jay. I'm telling you, that's what the class is for. What it's going to do is it's going to give you this screencast link. And the screencast link is going to be a link to the picture that you just took, that you just uploaded. So if I copy that link, once again, I can post the link in the classroom. And by posting it in the classroom, once again, it creates that opportunity for us to have a conversation. But even more importantly, is now I can go to my spreadsheet and I can go to my tracking sheet. And if I right click, I can paste the link directly into my tracking sheet, or from this link, I can go insert. This is a little Excel trick, guys. I can go insert and click on this button that says link to create a hyperlink. I'll go through it. And what I can do with this hyperlink is by pasting that screencast link in there, I can call this trend trade long and hit enter. And now I know exactly what I was looking at. So when I fill out this sheet, today's date is the 1st of August, right? So I'll put my date in there. What type of trade was it? It was a high probability trend trade. I'm going to put trend trade. And let's talk about it. How was I feeling? Guys, when I took this trade, I was confident because my rules were met. This is a little redundant. There's your trade again. Was it coming from a termination condition that created a full reversal? Well, let's look at our picture and find out, right? I wasn't. I wasn't coming from a termination condition that created a full reversal. So we'll just call it a weak bottom. What were my large chart triggers? So in a pop out, Lady P, when I put the chat room up, I use a pop out. I hit the button down at the bottom that pops it out. And if you do that, you can't control V, or you can't copy paste. So if it's the pop out outside of Discord, you can't right click and copy paste. So you have to use Control V. That's your paste function after you copy it onto your clipboard. Does that make sense? Practice it once or twice. Make sure that you have it. So learned hand, OFM. Have you not been in my class long enough to know OFM? What is OFM, guys? That is odds favorable momentum, right? No, not at all. OFM means odds favorable momentum. It means that you had that strongest trigger look. What were the triggers on your 5-1? That's okay. Rakesh, journaling will be your biggest asset. It feels like work, doesn't it? It did to me. I didn't journal at all in the beginning. I lost $5,000 in 2 days because I had no idea what I was doing. What'd you do on your first target? What'd you do on your second target, right? How did it go? And then, guys, this is your notes. How did everything end up? When everything was said and done, did you follow the rules and win? Did you get stopped out on your second target? Did you break your rules and lose? And then Rakesh, the reason I believe that this spreadsheet can be the biggest asset to new users, and it certainly was to me, is that if you take 5 trades today, you're going to go back and look at 5 trades, right? You're going to go back and you're going to look at what you did, how it went, whether your rules were met, what the result was, and you're really going to be able to recognize. Yeah, he's not David B. You guys are going to get me on a tangent real quick. So, Rakesh, if you get in the habit of doing this every day, what's going to happen is it's going to set you up for the day. It's going to get you thinking about the things that were great. It's going to get you focusing on the positives. It's going to get you focused on the advantages, and it's going to create an awareness of the things that aren't working for you. So if you don't have the habit, start working on it. So Ace J, it was downloaded onto your computer, but let me go one further. There's mine. Take mine, right? Because I've got 250 plus looks. It's right above you, Rakesh. Look up one click. And I put the tracking sheet in the room, guys. If you don't want mine, if you want to start fresh, if you want to make your own because you are a strong, independent kind of person, which I'm totally cool with, here's the link to the tutorial section where you can download your own version. But I'm telling you, why not just steal mine, guys? I've done a lot of the work for you. Get those pictures, start committing them to memory. Oh, and let me show you the other cool part. So we got our screencast app, right? We copied, we put it in the room, we're waiting, we put it into our spreadsheet. So check this out, guys. If I go to screencast.com, oops, and I actually sign in, there's that picture that I just uploaded, right? So every time I take a picture of something, whoops, I'm messing it up, it comes to my screencast. I can come back and look at it. I can re-annotate. I can share it later if I need to share it later. I can go through and I can go by the newest, the oldest, the most viewed, the least viewed, right? And I can kind of get myself in a position where I just keep coming back and looking at these things because repetition creates recognition. So you guys that are brand new with it, do me a favor, take a picture, post it in the room. Let me know that you do it. Let me know that you're comfortable. Where did I go on this one? That's my link. That's my link. Learned hand, you posted. Strong triggers, no divergence, perfect entry, making money. Learned hand, that's pretty good for a dullard, isn't it? That's a rules-based trade. Guys, I'm going to encourage you. Um, so if I called you a jackass, you'd fire me, right? If I talked down to you, you'd fire me. If I was ugly to you, you'd fire me. I hope you'd fire me. I hope you would never allow anybody to talk to you in a manner that makes you feel bad. I need you to institute that rule for yourself, guys, because you're going to believe you. If you start telling yourself that you suck, you're going to believe that you suck. If you start calling yourself names, you're going to do yourself name. Like, guys, be good to yourself. So learned hand, yeah, and he kills a kitten every time he thinks about you, K-Pops. True story. Telling you guys, I've taught a lot of people in life, and the people that talk down on themselves are the people that struggle. So learned hand, did you need a 21 range up to make this decision? Of course he didn't, because he was too busy. So guys, this is where I encourage you on simplicity, right? When I tell you to keep it simple, when I tell you to let it be two charts, this is why you made him sit on the other side of the room. Should have put a muzzle on him. It is, guys. Negativity is cancerous. Positive mental attitude, PMA. I'm all about it. You're going to find what you look for, right? If you look for reasons to lose, you're going to find your reasons to not take trades. If you look for reasons to win, you're going to embrace advantages. This is a beautiful trade. Guys, this is a trade. Your charts are a little different, but the smalls are above the large. I don't know what all this extra stuff is, learned hand. I'm sure it's advantageous in some arena. Why? Why do you have 55.8 triggers on there? Just curious. And I'm not telling you don't have them, but what does that do for you? Does it create an advantage in there that a 34.5? Okay. If that's what you need, that's great, right? Guys, I never tell you how to trade. That might be stronger than what? So let me ask you this question. Hypothetically, learned hand. If you're 55, if you decided that these triggers weren't the best look, right? Would you skip that trade even though you had odds favorable, even though you had a clear path, even though you had the perfect spot for entry? But what if the 55 said no? Would you just ignore it? And kind of the point I'm making, guys, is when you put too many options in there, your brain is probably going to go to the one that gets you a trade. So simplicity very often makes life easier. It really does. Look at that termination condition to the tick, right? So I throw that out there. And again, guys, you can do whatever you want to do. Your trading is none of my business. My job is to teach you to read indicators, to recognize advantages. What I can tell you through experience is that the people that look at more charts, the people that create more possibilities for them to have to weigh options, don't do as well as the people that keep it simple, especially in the beginning. So if you're not making money consistently, and I'm not saying that you're not, learned hand, I have no idea what your trading's doing. Sometimes less is more. Comes and goes, right? So inconsistent. How do we get consistent? You have a set of rules that removes opinion, right? Guys, look at the gap theory is still. The S&P is stuck right now. Termination creates a full reversal, right? You get that bar. Well, it's trying to, but those large triggers are a full bar away again, guys. This is crude oil, and crude oil's telling you not yet. Termination, look at how it gets run through at that midband inside of favorable large triggers. Guys, when we go to three different charts and you see three different scenarios where there isn't a trade to be had, a lot of you are telling yourself, Mark, how am I ever going to make money if it doesn't set up? Guys, that does set up. It just doesn't set up every 5 minutes. All right, let's see what you did. 1041, 1040. So you had a termination condition. Your synthetic triggers stayed up. Your small triggers went up. Your small triggers went up. You ended up with an uptrend. Everything said up at 1042. I'm trying to gauge it. You jumped in and you made money. I love that you made money. So let's go through the positives. Let's go through it, Lady P, because you didn't give me any rules, right? No worries. You want the Sunday school answer? When the rules are met. So one thing I'm going to do is your entry was at 1041 and a half. So let's highlight your entry. Your entry was about right here. Does that make sense? Am I looking at it correctly? You've got indicators over your entry price, 15, 18, 60-ish. Okay. So let's go through it together. Lady P, at your time of entry, the first thing that we look for, right? Looking at my large chart, and I can say without question the trend is up. Does that make sense? The trend is up, so it was green. What's the next thing that we're looking for? Once we establish the trend, we want to establish momentum. Do we have odds favorable momentum? Well, it's not your best look, but the smalls are up. They're trying to break above the large. The large are wide. So your momentum isn't weak, but it's not strong, which means that it's not a bad look. And then once we gauge momentum, what's the second advantage that we're looking to give ourselves? That's that clear path. And Lady P, this is absolutely beautiful, right? There's nothing in the way between you and a potential target. I mean, there is nothing in the way. So your path is clear. So our trend is up, momentum's iffy, and the path is clear. Rule number 3, let's go through, and I'm going to write it out as well. Use that call out button. Remember that rule number 3 says that we are going to buy, because it's going to be a long trade, a pullback at an area inside of favorable large triggers. And I think that this is the one that gets a lot of people. And you put a circle or you put a square right where that pullback actually happens, right? So what you did here on your entry, and this is very similar to what PFI did, is you used momentum. Everything was up, everything said go, it's coming off of support, and you really just kind of let it clear and go, and you made money. So you traded with the trend, right? You traded with momentum, you traded with a clear path, you bypassed rule number 3 and you got into the trade and you were able to make money. And I love that. That's a great thing. You followed each of these items, right? What you didn't get was the pullback. It doesn't mean that it's not a great trade. What it means is that it's not a high probability trend trade. But chart reading, momentum, path, trend, right? Chart reading made you feel as though a long was the right trade. You also had the momentum and everything was facing up. Does that make sense? This was your potential trend trade spot. And let's look at something that's kind of cool. Is on the trend trade, the momentum still isn't great, but the path is clear. And then your small chart reinforces the idea that momentum's going away. And ultimately it pushes down lower. I think you did a great job on this one. I think that you had more advantages than disadvantages. And I think that because of those advantages and the momentum that you see in the moment, that worked out beautifully for you. And there's a gentleman that's not in the room. I have to send him a message, make sure he's good. Ron. And this is the only trade that he takes. When the momentum is up and the path is clear, he gets in, he gets out, he gets paid, and then he goes on with his day. He's usually on the beach by noon every morning. So, great job. Does that make sense? Does the feedback make sense? So what I want you to do is I want you to start writing these things on your chart too. Because what you're doing is you're reinforcing these ideas. He does, right? You're reinforcing these ideas that momentum creates an advantage. You're reinforcing these ideas that a clear path gives the market somewhere to run to. And every time you write it on a chart, you're reinforcing the advantages that are in place. Luciano says termination creates a full reversal gives odds favorable gives a pullback to resistance inside of favorable large triggers, and that market goes right down to the next key area. And then here's Luciano's. He waited because of the divergence, right? It had a strong pull back to the large triggers. So he said, you know what, I'm going to let it start working its way down. But Luciano, it's a 50-50 trade with a couple divergences. I like that you were patient. And then once you got into this trade, you were willing to take 5 ticks into the trouble spot. But you let that other one run with the momentum, and that's a $250 trade. Same thing, right? If we go through Luciano's chart, the direction is down, the momentum is down, the path is down and relatively clear, and everything on the small chart says down. Lady P, thank you so much for being here today. Thank you for posting that first trade. I'd love to see you get in the habit Show me 5 to 10 pictures a day. Let's talk about every one of them. Let's really get you to where you've committed to being. Um, I'm excited about it. New users are my favorite. I want to see your pictures, guys, because if we stop bad habits before they get a chance to really grow, your life will be easier as a trader. I promise. I've been there. I've done it. Luciano, great job on that one. Nice trade. So where are we at right now? Termination, guys, those large triggers are still above all the areas, aren't they? Still above my reversal bar marker. This mid band is behaving as a termination condition, and look how the market's trying to pull back up and close that gap. Kind of in a holding pattern on crude. Guys, NASDAQ is a mess today. Look at your smaller, faster chart. Look at termination conditions, right? Guys, your rules are keeping you out of this nonsense. The last rules-based trade was up here, and it was a small winner and then a break-even stop. There is such a fight going on in the NASDAQ right now, and I'm not sure what's causing it. I don't care what's causing it. Holy smokes, guys, S&P, gap theory. What time did we take that picture? $10:43, I drew this arrow, guys. It's 11:20. 37 minutes. But the pattern held true. Do you see it? 37 minutes, but it did exactly what pattern suggested that it would do. These are the patterns that you have to learn, right? All right, guys, I'm going to take 5 minutes while the markets do what the markets do. Um, I want this last bit of the hour, guys. Let's keep it focused on what you want to talk about. So, Ace, if there's something that you want to talk about, let me know. K-Pops, don't be shy. M, Andy, Hamid, Rocket, Rakesh, Safia, Mark SP, David B, Finman, Vad, GWC Trader, Tony the Tiger. All you guys, if you have a question, throw it in here. Johnny Rocket, I have to say it at least once today because it makes me smile every time I say Johnny Rocket. I'll be back in just a minute, guys. And then when I get back, we'll talk about what you want to talk about. Sit tight. All right, ladies and gentlemen, let's finish strong. So the gap theory worked, didn't it? I think this is such an important picture. We knew that because the midband was reached and the large triggers didn't follow, that the price was likely to close the gap back, and that's exactly what it did, guys. And what it does is it keeps you from trying to take this long, right? It keeps you from trying to take that hope trade. And Debbie, that went right back to your fib, didn't it? Almost to the tick. And now we're just waiting to see what the market wants to do. Crude oil, same thing. Gap theory once again, keeping us out of these shorts. Then NASDAQ, weak triggers, 3 divergences, and off to the races. What would you guys like to talk about? Anybody? Questions? I know everybody's an expert. Well, I guess I'll just start scrolling through pictures I have. Let's see if I have anything that works. Absolutely, Daryl. Great question. What's a good top? So there is no difference between a good top and a great top, Daryl. Um, let's keep it black and white. Let's have, so I may take another 30-minute vacation from my vacation. Rakesh, on crude, you're going short off the termination condition, ignoring the gap theory here, right, Rakesh? You've made the decision to ignore the gap theory. Where was your entry? 8105? Why did you get in where you got in? Just curious. Because it looks like you got in directly into Fibonacci support. But do you see how writing rules? Momentum, I'm not sure what DT means. You have a termination condition, but your large triggers are up, your small triggers are down. Downtrend? Looks awful green to me. Don't have odds favorable momentum because the triggers are going opposite directions. And we don't really have a clear path because of that fib. So what you're doing is you're hoping that this termination condition changes the market forever, right? You've reached a mid-band and the large triggers are a full bar away. So let's go take a look at it. And sure enough, that gap theory did exactly what we expect the gap theory to do, and it closed the gap to those large triggers. If you got in at 8105, there's 2 choices for that. It is right here, right? That's 8105. That's the only place price hit it. And then the other place would be somewhere right about here. Was it the one on the left or the one on the right, Rakesh? Let me look at your picture again. Because your picture didn't have any entries. So I'm curious, you got in, and in this picture, it hadn't yet reached 8105. But do you see how that works? If your entry was 8105, this is the only place where that number was hit. So I'm a little confused. It still hadn't reached an HVA line. Am I missing something? Let's go through both scenarios. If it's the first one short here, you're fighting everything, right? And if you're going short here, we're fighting the gap theory. Price reaches the midband, large triggers don't follow. Large triggers are green, red triggers are red, right? So there's a huge difference between the two here. I'm not sure shorts were in order. That gap theory would have kept you safe and out of that trade. Then Jose on the NASDAQ, 50-50 with divergence. And it got you. See how it's 50-50 on the pivot stop out? Divergence prints. Oh, it's definitely a 50-50. 100%. And why is it 50-50, 100%? Let's go to the rules. The divergent wasn't all the way to the end. Because that divergence prints a bar at a time, bar at a time, bar at a time. And it stays valid until it's broken. So it almost will never go all the way to the end. But you can recognize that it's there, right? You just have to respect that one. And then your entry was at 20. And I like it. Without the 50-50, it's a good looking entry. But because it is a key area, because there is divergence, and see how it went to the small triggers and then continued down? Very common with the NASDAQ. And we've talked about this one a lot. And what did it do? It's pushing down. What happened down here? See how it ultimately extends, Jose? I could see where the confusion may have come in. This was definitely a 50-50. I had a big fib there too. But I may be 10 days back. I may be different than you. But even if that fib is gone, certainly a 50-50 right here though, right? I'm not even sure where I'm at. I'm 10. I haven't cleaned out data on NinjaTrader 7 in a while. I probably need to. I was going to try and teach on 8. But I've got a 50-50 at the divergence high, and then the divergence here, and that's just, I mean, your entry, if it was a clear path, is Rockstar, and it would have been one of those costs of doing business. Yeah, you and I are kind of different. I probably need to rebuild my data and go through. I'm going to do a full clean out this afternoon. Um, Rakesh, were you able to get that Ninja order working? But I think the divergence high on that one. Yours is NT7? Yeah, that divergence high should have been enough, I think. And you're 10 days back, Jose? I'm going to rebuild mine. It's probably me, not you. As many tweaks as I make on mine, it's probably me. So I'll fix mine today. Oh, it's not a technical issue? Your 14 days expired? Okay. Hopefully they get you all squared away on that one. K-Pops, have a good one, man. How's the weather in Dallas? You guys still hot? It's Texas. 104 in Houston. I may be there soon, Rakesh. 107, Debbie. Holy smokes. My goodness. My wife is being courted by Methodist. She started her career as there. So they're trying to get her back to run the place. We'll see what happens. In Houston. Yeah, she started at Methodist in the med center down there. She's a cardiovascular OR nurse, surgical nurse. Now she's surgical director, stuff like that. And Methodist Willowbrook is trying to pull her in, so she's in negotiations. Maybe time to settle down. We'll see what happens. It is. My youngest was born at Methodist. Okay. Can I ask what you do? Okay. I want to say I had knee surgery with Methodist too. I don't even remember. I've had so many at this point. The cool thing is I can do this anywhere I want, right? You can do this anywhere you want. Guys, you can take your ability to read charts anywhere in the world that you want to take it. Houston is the Mecca. And Tony, my wife worked with surgeons who have procedures named after them and instruments named after them. So it's she's got a pretty cool resume. Guys, I'm married up. I highly recommend it if you get the opportunity. Full circle. Absolutely. My pharmacist is in the Woodland, Ziba. Guys, everything's still set up, right? They just had to work their way through the key area to see what happens here. Notice that when this 50-50 didn't work out, the market pushes down, then you get three divergences in the same location. Patterns, guys, patterns over and over. I like that we can chat about stuff that isn't trading. Guys, your S&P is doing a whole lot of nothing. And then there's one of those 50-50s on crude oil. Smalls above, large below, no divergence, strong triggers. You guys want to see what happens? Stop outside of the window of opportunity. If it goes much below this, I don't want it. 50-50. Smalls are up, large are up, trend is up, no divergence, smalls outside of the large. Our window of opportunity was not a big window of opportunity. Is it worth 8 ticks to see if it works? My plan says it is. My plan says that this is a trade that I'm willing to take because of the advantages that are present. Your plan may be different. Whoops. 2 charts, right? You're in that trade. So, Daryl, how many of your losses have you shown me today? And we need to talk about good tops and bottoms. That's how we're going to finish. And I'm just curious, and I throw this out there not to put anyone on the spot, but if you're losing trades, show them to me. Let's talk about them. Because sometimes it is what it is. There we go, guys. 50-50 trade didn't work. Small loss. Take it every time. Let's go to good tops and bottoms, Daryl. And I made a little slide set for them once again. Here's your picture for a good top or bottom. Price reaches the area, guys. It's a termination condition, right? So I want you to embrace the idea of a termination condition before you ever try to consider something a good top or bottom. Price has to reach the area. No triggers break through. It's a termination condition. Daryl, are you comfortable with that side of it? Awesome. So when does a termination condition become a strong top or bottom? And guys, there's not a good top and then a strong top and then an amazing top and then a fantastical top, right? It either is or it isn't. It's one or the other. It's either a strong top or it's not a strong top, right? And then strong and good will be synonymous. So if I say good top, it can be a strong top. If I say strong top, it can be a good top. Just because both of those have been turned out or put out. So first, the termination condition has to happen, and then I have to get a full reversal. My trigger lines have to go, large triggers go from green to red, right? Smalls get below, trend changes. So Daryl, this termination condition becomes a good top right here. This termination condition becomes a good bottom right here. And notice that it goes right to the next termination condition. So just because it's a termination condition doesn't mean that you're automatically entitled to win whatever trade comes after. This termination condition becomes a strong top or a good top right about here, where the smalls finally get below, where we get that full trend reversal. And then we have to work through the areas. Does that make sense, Daryl? And then ideas that aren't a good top. No worries. Yeah, I'm telling you guys, repetition is the key to what we do. So here the small triggers break through, right? The large triggers don't. Even though the market reverses, this isn't what we consider a strong top. Down here, the smalls break through, the large try to. Since it's not a termination that creates a full reversal, I'm not calling this a strong top. It doesn't mean that the trades that follow it might not be good ones, but just for the definition, this doesn't qualify, this doesn't qualify, this doesn't qualify because the trigger lines break through. Up here, if this reverses, that can be a strong top. Does that make sense? So far, so good? And then, guys, I use these strong tops and bottoms to help me make decisions on 50-50 trades. If the market isn't coming from an area, from a termination that creates a full reversal, that 50-50 trade that follows has less chance of working. If it comes from a strong top or bottom, this one has a better shot because it's coming from a key Fibonacci area. So when you talk about 50-50 trades, guys, waiting for that best of the best look, waiting for that strong top or bottom, making sure that there's no divergence, creates a set of advantages that help. And then momentum after a good top. So we're actually looking at after a good bottom, right, Jose? Just want to make sure I'm reading this right. That's okay. Termination, right? Triggers are up. Smalls are down and below, though. And then there's that John Novak trade. So 39, 39. So Jose, did it create a full reversal bar before you took the trade? It did. 39, 39. The top of this bar is 26 right there. Okay, so you got your full reversal bar. Cool. You had no divergence. You take the pullback, quick target, and then maybe held that one a little too long, do you think? That would be the only challenge that I see with it. Just held that second contract too long. But that's great execution. So Jose, the one thing that I would encourage you to do, and guys, this is for everybody. Um, I don't know if you saw it, Jose. One of the things that nobody's doing on their momentum trades is writing a freaking rule on their trade. Nobody's writing down the rules. Nobody's using checklists that I can find. Oops. So I made a checklist yesterday because I know what happens after John Novak teaches for a week. Everybody gets excited. I get excited. That's a trend trade checklist. Let me see if I can open up my momentum checklist that I made. Here it comes. So guys, I made the momentum checklist. Is the market coming from a good top or bottom, right? Strong top or bottom. And then Daryl, this goes back to the lesson. I put pictures of what it has to be, right? Strong tops and bottoms, so that I know exactly what I'm talking about. And Jose, you absolutely nailed it. No termination hit on the large chart. Once again, Jose, you were solid. Fibs, midbands, one-to-ones at those strong small charts, right? So we made a checklist. And then, guys, John Novak created a couple pictures. They're right in the Discord area. When you go to the trading rules, and there's a very definite look for the momentum trade, right? Fibonacci creates the reversal or termination condition, makes a full reversal bar, violates that reversal bar marker if you're using it, and then you get that perfect entry, right? So Jose, when we look at yours, perfect execution. And then management becomes the next issue. Nicely done. And it's not that the NASDAQ's not helping, right? NASDAQ hasn't been doing a whole lot today. It hasn't been easy. But with that entry at 16, make your $100 at 100, right? Because guys, these momentum trades, these aren't barn burners. These aren't the trades that make all your money. If it's momentum in, it's momentum out, right? So if divergence prints, man, you got to be out at that point, especially when your large chart looks like this. Small's below the large, they're not doing anything, right? That momentum's not going to carry you forever. And Jose, yours corresponded with a high volume area line, which makes it even better. So I like it. I think it's great execution, Jose. And I think just working on that management a little bit, remembering that home runs just don't happen all the time, guys. It's okay to get paid and then sit on your hands and wait, right? There's NASDAQ. What a pain in the butt NASDAQ is right now. Look at what NASDAQ's been doing here. Huge run up from the termination condition. And now buyers and sellers are fighting it out, right? Maybe a long trade right here that didn't work. I remember it. And after that, really no rules met. And then Jose, I think one of us needs to rebuild. Because mine said that your momentum trade was destined to lose. Yours didn't have the same information. Whoops, that's the wrong chart. But I want to see something. Well, guys, let's not discount the fact that it might be me. And make sure, too, if you change them, see how I'm putting a 13.2 Renko on here and not a 34.5 for the NASDAQ? I've seen people do this as well, where they go through and they accidentally put the wrong template on it because they're thinking, oh my gosh, 13.2 is my large chart, right? So let's see. Jose, this may be your problem because that sure looks familiar, doesn't it? So Jose, do me a favor, right click on your chart. Daryl, right click on your chart, go to templates and go to the NQ34.5 because Jose, that looks just like yours. And click OK. And let's see if that puts us in line with one another. I'm telling you guys, I've made every mistake. So Jose, Daryl, give that a try and let me know if it changes the scenario a little bit. 34.5, yes, Jose, because remember, we're trading that 34.5 for NASDAQ, not a 13.2. But if you do any adjustments to your chart, muscle memory has you looking for that 13.5 because it's right at the top and it probably defaults. Guys, we can work through tech problems here. A lot of these mistakes I've made, so I have an idea how to fix them sometimes. Let me know if that changes it, Jose. Because mine looked very much like yours when I put the 13.2 on it. Nope, yours is the same. Okay, that was worth a try. So I'll go through and I'll try and rebuild mine. Guys, you can reset, and I guess this is a good way to end class today. If you go to the software user guide, yes, you can, Jose. NinjaTrader 7, right? Guys, if you go to the software user guide, I forgot what I was talking about. Here we go. Going through and being able to delete old charts, templates, fresh, all that good stuff is all right there in the user guide. And then if you need help, remember that Jason's available in tech and I'm available here. And then Jose, you want the templates? Give me just 1 second, Jose. I've almost got it for you. There we go. There's your zip file. Just extract those into NinjaTrader 7 templates chart. That has the 13.2 and the 34.5 so that we can be consistent with each other. And hopefully that helps. And then what I'm going to do real quick, guys, if I disconnect from my live data, one of the things that you can do is you can go to Tools and Options when you're fixing that NinjaTrader 7. Go to Data. I can reset my database. I can repair my database. And make sure that your merge policy is do not merge. So Jose, double check that one too. Because at one point it was merge. I remember we fixed it. And maybe since you went back to 7, it defaulted back. And then when I click OK and I reconnect, my charts are going to repopulate. They're going to recalculate once it connects to that continuum. So Jose, we'll see if that maybe puts us on the same page. And guys, that's class for today. We're going to finish with this little tech lesson. I hope you got something out of it. I hope you learned something. I hope you're going to embrace simplicity a little bit. I hope you had success in being patient today because today was a big patient day. And I'll be back tomorrow and every day for the rest of your life to bug the heck out of you to help get you where you want to be. Thank you, Debbie. Stay cool. When's the vacation? Thank you, Ziba. Oh, I appreciate that. Good lesson there. Next Thursday. Awesome. I'm so excited for you. And then Jose, it looks like my fibs are the same after the reset and the rebuild. If you do the same, let me know. You can message me too if you need help. Something is different on ours. Thank you guys. And then Jose, I'm going to just for grins, once this loads, I'm going to go 5 days back and take a look because I know that John mentioned people being 5 days back as well.